Upstart Personal Loan Review. Here is the honest one-sentence verdict right up front. Upstart is a genuinely good option if your credit is thin or a little bruised, but the fees can quietly eat you alive if you are not careful. So it is a solid yes for some people and a hard no for others. So what exactly is Upstart? It is not a bank. It is an online lending platform that uses artificial intelligence to decide who gets a loan. Think of it like a matchmaker between you and the actual money, which comes from partner banks and credit unions. Upstart handles the application, the underwriting, and the servicing, but the cash itself comes from somewhere else. That matters because it means Upstart can look at things a traditional bank would never consider. Here is the big differentiator. A normal lender looks at your credit score, your income, and maybe your debt to income ratio, and that is about it. Upstart looks at your education, your field of study, your job history, even where you went to school. If you are a recent college grad with a solid degree but a thin credit file, or a nurse who just finished training and has a great job but no credit history, a bank might say no. Upstart might say yes. That is the whole reason this company exists. But here is where it gets tricky. Because Upstart is taking on more risk by lending to people who do not have a perfect credit score, they charge an origination fee to cover that risk. That fee ranges from 0% to about 5% of the loan amount, and it gets deducted directly from the money you receive. So if you borrow $10,000 and the origination fee is 5%, you only get $9,500 deposited into your account, but you still owe $10,000. That is the first hidden cost most people miss. Now let's talk numbers. Loan amounts go from $1,000 all the way up to about $75,000. Repayment terms are short, either 3 years or 5 years. The APR, which is the total cost of borrowing including fees and interest, ranges from about 6.2% all the way up to nearly 36%. That top end is high, and it is where the origination fee really stings. Here is a concrete example so you can see it. Say you borrow $10,000 with a 3-year term, an APR of about 20%, 6% origination fee. You get $9,500 in your account. Your monthly payment is about $370. Over 3 years, you pay back about $13,300 total. That is over $3,000 in interest and fees on a loan where you only actually received $9,500. That is a lot. But here is the part nobody tells you. If you pay that loan back quickly, say in 6 months instead of 3 years, the origination fee becomes a much bigger percentage of the total cost. Because the fee is a flat percentage of the loan amount, it does not shrink if you pay early. So if you borrow $10,000 with 6% fee, you pay $500 in fees no matter what. If you pay back in 6 months, that $500 represents a much higher effective APR than if you stretched it out over 5 years. So if you plan to pay off the loan fast, Upstart is actually one of the more expensive options out there. Now let's answer the questions people are actually asking in the comments. First, if you get a pre-approval letter, are you guaranteed to be approved? And this is the number one complaint about Upstart. A pre-approval means they did a soft pull of your credit and ran their algorithm, and it looks promising. But the final approval only happens after a hard credit pull and a full verification of your income, your employment, and sometimes your education. A lot of people report getting a pre-approval, submitting all their documents, and then getting denied. The pre-approval is not a guarantee, it is a maybe. So do not count on that money until it is actually in your bank account. Second, how does debt consolidation work with Upstart? Do they pay your creditors directly or just give you the cash? Upstart gives you the money. They deposit the full loan amount minus the origination fee directly into your checking account. Then it's your job to take that money and pay off your credit cards or other loans. That means you have to be disciplined. If you take out a consolidation loan and then spend the money on something else, you are in worse shape than before. Third, can you get a loan with part-time income or recent health issues? Upstart does consider part-time income, gig income, and other non-traditional sources, but they still need to verify it. If you have recent health issues that caused the gap in employment, you will need to explain that. Their algorithm is designed to look at the whole picture, not just a single number. So a temporary setback is not an automatic denial, but you will need documentation. Fourth, what does confirm your education mean? This is a step in the application process where Upstart asks for your degree, your school, and sometimes your graduation date. They do this because their model uses education as a factor. If you say you have a bachelor's degree in engineering, that is a positive signal. But they may ask you to upload your diploma or transcripts to verify. This step can delay funding by a day or two, so do not expect instant money if you have to dig up old school records. Fifth, is Upstart a scam? No, it is a legitimate, publicly traded company that has originated billions of dollars in loans. But the pre approval issue and the high origination fee lead a lot of people to feel misled. It is not a scam, but it's not as straightforward as it looks. The frustration comes from mismatched expectations, not from fraud. Six, what about borrowers with a previous bankruptcy? Upstart does not automatically disqualify you for a past bankruptcy, but it will hurt your chances. Their algorithm weighs your entire financial picture. So if you have a bankruptcy from 5 years ago, but a stable job and good income now, you might still qualify. But expect a higher APR if you do. Seventh, what APR can you actually expect with a fair credit score? Say around 633. With a score in the low 600s, you are looking at the higher end of the APR range, probably somewhere between 60%. That is expensive. And if the origination fee is on top of that, the total cost is significant. You really need to run the numbers before you accept any offer. Eighth, how does Upstart compare to other lenders like Avant or Ascend? Avant targets a similar audience, people with fair to good credit, and their APR range is also high, but their origination fees are usually lower. Ascend is another online lender that focuses on debt consolidation. The main difference is that Upstart uses education and employment data. So if you have a strong degree but a weak credit score, Upstart might give you a better rate. But if your credit is decent and your education is average, Avant or a credit union might be cheaper. Now let's talk about the cons, honestly, because that is what builds trust. The biggest con is the origination fee, at up to about 5%. It is higher than many competitors. And because it's deducted up front, you get less money than you borrowed. That's frustrating. The second con is the short repayment terms, only 3 or 5 years. That means higher monthly payments. If you need a longer term to keep payments low, Upstart isn't for you. The third con is the late fee. If you miss a payment, Upstart charges either $15 or 5% of the late amount, whichever is greater. That can add up fast. The fourth con is the education verification delay. If you need money quickly, having to upload a diploma can slow things down. The fifth con is the denial rate after pre-approval. It is high enough that you should treat the pre-approval as a maybe, not a yes. The biggest pro is that Upstart considers more than your credit score. If you have a thin file or a few blemishes, you have a real shot here. The second pro is fast funding. Once you are fully approved, money can hit your account as soon as the next business day. The third pro is no prepayment penalty. You can pay off the loan early without any extra fee. The fourth pro is the soft pull for the rate check. You can see your estimated rate without hurting your credit score. The fifth pro is the loan amount range, which goes up to about $75,000. That's a lot of money for a personal loan. So, who is Upstart actually for? It is for someone with a strong education or job history, but a credit score that is not quite there yet. A recent college grad, a new nurse, a teacher with a master's degree but a thin credit file. If you fit that profile, Upstart might give you a rate that is actually lower than what a traditional bank would offer. Who should skip it? Anyone with excellent credit should go to a credit union or a traditional bank where you can get a much lower APR. Also, anyone who plans to pay off the loan very quickly should skip it because the origination fee will make it expensive. And anyone who needs a longer repayment term, like 7 years, should look elsewhere. The main alternative people compare Upstart to is Avant. Avant has a similar APR range, but usually lower origination fees, and they do not use education data. So, if your credit is decent, but your education is average, Avant might be cheaper. If your education is strong, but your credit is weak, Upstart might win. Upstart is a legitimate, useful tool for a specific type of borrower. If you have a strong education or job history and a credit score that is holding you back, it is worth checking your rate. But if you have good credit, or if you need a long term, or if you plan to pay off the loan fast, look elsewhere. The origination fee is the hidden trap. Do not ignore it. I would give Upstart a solid 3 out of 5. It does what it promises, but the fees and the pre-approval issues mean you have to go in with your eyes wide open. One more thing people do not talk about enough is how Upstart handles loan modification. If you hit a rough patch and need to skip a payment or extend your term, Upstart is not the lender that will work with you. They do not offer formal hardship programs like some banks do. So to recap, Upstart is legit, but fees are high, pre-approval isn't guaranteed, education helps your rate, debt consolidation is on you, short terms mean higher payments, no hardship programs, and check Avant if your credit is decent. If this helped, hit subscribe for more honest reviews.